Welcome back. I'm Andrew, your crypto guy on the internet. I'm wearing a wrinkly shirt, but we have a lot of stuff to cover this week. This was a seriously pivotal week for stocks and crypto and the future of our nation. So let's cover Jerome Powell raising rates, the GDP numbers, and then changing the definition of classic economic terms because of the scary reality we're in. Rather than fixing the problem, we're just going to change the definition of the problem. And then we have two major policies coming around that will affect your stocks, following by the outlook for the next 2 months. A lot of good stuff here. So first we have Jerome Powell, Wednesday. Remember, he's the most influential man in the market. He's the Fed chair. Jerome Powell comes out and he goes, I'm going to raise rates by 75 basis points, 0.75. And the market went up immediately because that's what we predicted. That was something in the certainty column. Remember, uncertainty is what makes things go down and panic. But although raising the rates by 0.75 is generally scary, we knew that would happen, and that's indeed what did happen. So the NASDAQ went up 4% and crypto went up even more. Bitcoin went from 20K to like 23,000 like that because of what he just said. But then he kind of pulled something that was silly to me. He goes, I do not think the U.S. is currently in a recession, and the reason is there are too many areas of the economy that are performing too well. And he focused on the job numbers. And then the next day, when the GDP numbers came out, it was indeed 2 quarters in a row of negative GDP growth. Now, for the past 50 years, at least, the technical definition of a recession is 2 negative quarters of GDP growth. And that's not bad. That's just a term to call something that's real. So why does that matter? Well, a nation, just like a plant or a family or a company, must grow. It has to improve constantly to survive. It must be constantly growing, or at least not retracting or shrinking. You're allowed to have one bad quarter, but 2 in a row, that's not a fluke. That's serious. That's 6 months in a row of going the wrong direction. So we had 2 quarters in a row of negative growth, meaning we're receding, we're retracting, we're shrinking. Recession. That's what that word means, okay? But then Janet Yellen comes out and goes, yeah, it's not though. Because there are still some good things, like we don't have a famine yet, and people still have jobs. Okay, well, based on the order of how things play out, the jobs are the next thing to fail. Now, especially in the tech sector, there are already hiring freezes and there are already mass layoffs happening, okay? And you're going to see retail start laying people off. Walmart's talking about doing that. And it's going to bleed into other sectors. And then, since this isn't a recession, according to Mushroom Lady, Janet Yellen, who I have no idea how she still has a job at this point. Karine Jean-Pierre echoed it, and she's a total sweetheart. But she has to lie to your face, like that's her job. So Peter Doocy comes out, and he's the only one who actually says any real questions. He goes, hey, so we have 2 quarters in a row of negative GDP growth. That's a recession. And she's like, it's not. And he goes, yeah, but it is, though. I mean, the last 10 times in a row that we had 2 negative quarters, that's what a recession is. And from my own personal experience, when I was 14 years old and I learned the basic terms of economics, recession, the short definition that you wrote down for the test was 2 quarters in a row of negative GDP growth is a recession. Because that's, whenever that happens, that's what it is. But she goes, nah, that's not what it is, though. It's more convoluted than that. There are a lot of other things to consider. You can't just say it's a recession. And they actually changed the definition of recession on Wikipedia about a week ago because they hope that you people who are educated in the American public system, who never learned about basic economics, will just take her word for it. But some of us read a book, any economics book from the past 50 years. Or maybe you found a video of Milton Friedman on YouTube and you went, oh, and you learned about basic economic terms. So they've always existed that way up until about a week ago when they knew this shit was coming. So instead of admitting that we have a problem, they've been lying about it every step of the way. From there's no inflation, or it's temporary, or it's no big deal, or it's transitory, or okay, it's here, but there's no recession. Okay, there's a recession, but that's not the definition of a recession. And now the next thing, and this is what's real, this is what's happening right now. The next word they're going to try to change the definition of. So before they edit the Wikipedia page, write this shit down if you don't know what stagflation is, because that's what's happening. That's the next phase. So stagflation is a term for a very difficult scenario. When you have inflation, meaning the currency, there's too much of it, so it's not worth as much. You have inflation at the same time as a recession. So your growth is down and your inflation is up. There's no easy way to solve that. If it's just one or the other, you can do a policy and pretty much fix it. So if you're inflated but you're growing, you can solve it. If you're receding but your currency is stable, you can solve it. But if you have both problems, stagflation at once, the only way to really fix it is ugly, and you sacrifice employment numbers to solve it. So we have record inflation and now proven recession of 2 negative quarters. So the next thing to fall are employment numbers, which is what Jerome Powell said are terrific, and thus we're not in a recession. So you see how this isn't adding up? That's not the order of operations. You have a recession and inflation at the same time, the worst in 40 years. And that to fix that, if that's your plan, you have to cause a hard landing, which means people lose their jobs. And then everything stabilizes, and hopefully you survived that transition, is what they're calling it. Okay, it's not going to be a soft landing. So now we're trying to change the definition of things as if gender theory applies to math, which it doesn't. So if you're coming up with new genders and pronouns, you can invent words if you want, and you can even force other people to outwardly agree with you. But when it comes to money and math, it's yes or no. It's real or not real. Until you get to high level like theoretical physics, where we're still debating it, it's like a theory. This is real. So your fantasy terms of changing definitions to avoid reality does not hold up here. This is money. This is reality. This is people starving or succeeding. So stop lying to us. I can't believe these people are still on TV and anyone still listens to them, especially Janet Yellen. What a joke. Like, how do you have any credibility? How are you allowed in any building at this point? Like, you are a huge mistake, Janet. Someone needs to step in. Now, Jerome Powell fucked up by printing way too much money, but I think he was forced to do that because we didn't know if COVID was going to kill us all or not, right? And so he had like an impossible scenario. He had to do what he did. But now the only way to fix it, because supply is not being helped from policies, which we'll get into, they're actually making it worse, he has to force a recession. So why is he denying it? He's denying it to try to like keep the market from capitulating too hard because he wants that soft landing. Talk about ulcers. Jerome Powell has to be the most stressed out dude in the world. So what's going on with policy right now that will affect your stocks? Well, the first thing is we have a major climate package, okay? Now, in order to combat inflation and the climate, we're going to spend another $1 trillion. Why are we buying windmills and solar panels built in China when we're facing stagflation? And the lines around food banks are longer than they've been in a long time. I mean, they're double or tripling depending on the town you're in. If you drive by a food bank, there's a shitload of people there. Oh, well, maybe you live in Martha's Vineyard and you don't notice that's happening, but that is happening, and that's a product of stagflation, and it's only going to get worse. So, Manchin caves, and he signs on to a $739 billion. Now, here's how the Dems are selling it, and it's so twisted. So, it's $739 billion of new revenue from new taxes. So, they're taking more money from us, but then they're only spending $433 billion of it, which is a deficit reduction of $300 billion. So, we're going to take $739 billion from all of you, but we're only going to spend $430 billion, which means that we pocket $300 billion And that's money that's not in the economy, which will help with inflation because we just took your money from you. But at the same time, they're spending it on this other bill, which I'll get into in a second. Now, first, this energy bill, Manchin was in the way. He's a moderate Democrat. He's like, dude, we can't spend money on climate shit right now. People are going to starve here in the next couple months. It's going to be really bad. And so he was allowed one little line in here. Here we go. Specifically provisions that would mandate new oil and gas leasing in the Gulf of Mexico and Alaska. Manchin made this thing have something good in it. And then he's like, fine. As long as we can actually drill for oil during this, that's the only thing that'll really help anybody, is to increase the energy supply. You can buy as many windmills and solar panels as you want from China, but that's not going to answer our problem at all. So he goes, listen, if you let us drill for oil in the places we already were drilling before, that would offset some of these problems of the costs of living. We'll go down a little bit. But I don't know if that's going to overpower the insane taxes that we're all going to have to stomach now. Mostly a new flat corporate tax of 15%. Now, corporations, they're slick. They will figure out a way to pass that cost down to you. So let's say you want to go to McDonald's for some reason, and it's already $20 for a hamburger there, but now it's going to be 15% higher across the board. Because they don't want it, they can't take that hit. They have their margins and their shareholders, and they got to meet those numbers. So if they get a tax out of nowhere, they're going to have to pass that on to you. So now things are more expensive anyway. But don't worry, we're taking money out of the system, which is somehow going to help with inflation. But then we're going to spend only a little more than half of that, guys. We're doing a great job, right? They're spending the $300 billion that they're taking from us and not spending as a deficit reduction. They're actually spending it on this, the CHIPS Act. Now, on the surface, this seems like a good thing, but they kind of screwed us at the last second. So here's the problem we have. There is a chip shortage. There's plenty of chips, but we're having trouble getting them here through supply chain issues. Now, the majority of these chips are built in China and Taiwan. But Taiwan is about to be invaded by China, and so we kind of need to make those chips here. Otherwise, Teslas, cell phones, PlayStations, computers are going to continue to be way too expensive. And they're going to continue to be delayed. It's ridiculous. So we need to get these chips figured out and built here in the United States. And so we're going to offer a big pile of money to American chip making companies like Intel to start producing more here. We're going to give the money to these corporations to do this. But there was one line in it that Chuck Schumer changed and removed. And the requirement in this line was, hey, if we're going to give you money to build chips in the United States, you have to build them in the United States. You can't take the money we give you, which is taxpayer money, and then go have them built in China. Because the whole point of this is to not do that. So Chuck Schumer took that line out. So we're going to give billions of dollars to American chip makers and just hope that they don't save money and have them built in China anyway. So this is bogus. They're taking another $739 billion from you through taxes, which are going to get passed down to you from these corporations. And then the money they say that they're reducing on the deficit, they're just giving to oligarchs and corporations to then spend in China anyway. Okay, so how do we win here? There's got to be a way to make money, right? Well, if you have Intel stock or Texas Instruments stock, or even by proxy like Nvidia or AMD, those stocks might see a pretty good bump. Now, Intel as a company is kind of struggling. They are losing market share. But they would benefit the most theoretically by this CHIPS Act. So when this bogus bullshit passes, try to make some money on it with Intel stock. Hopefully they manage this. Now, I don't have a ton of faith in these guys over at Intel, but I mean, if that's a play you could make. So the market overview, and this is finally good. Bitcoin, especially Ethereum. Remember when this shit was, holy cow, it wasn't that long ago when it was $900. A month ago, it was $900. We've almost doubled already. So when you see major dips and everybody's like, this is the end of the world, and I'm like, guys, it's cheap, buy some. This is what I'm talking about. It pays off. Okay, this not going anywhere. So take these opportunities, buy some. Don't go all in because we don't know when the bottom is, but there's some indications that we've seen the bottom already. We do have about 2 months of a reprieve from Jerome Powell scaring the shit out of us. He doesn't come back until September with his next Fed meeting, so we have like 2 months to maybe make a little bit of a relief rally. Bitcoin is making higher highs and higher lows. That spells a relief pattern, right? And if we close the month above about 23.6, 23.7, which is in less than 3 days, that gives us some steam into the next month or 6 weeks or so. Now, am I going to be super excited about 24, 25,000? No. But if you break through here with momentum into the next month, hey, we might be into the high 20s. Really, it's not super bullish until we get into the 30s, like above here, like low 30s. That's when you've broken this pattern we've been stuck in. But this is a little bit of a relief rally in an overall bearish scene. You've just heard all the bad news. We're at stagflation. These people are lying to our fucking faces as if we didn't read anything in high school or college about economics. But overall, Jerome Powell's not going to come after us for a little while, so we might see some breathing room here. Have a good night.